Right, there are 4 students recording. Five students yet to join. Right, we get started. We finish at this slide on case 1, standard 3, no, standard 1C, misconduct. Now we just finish up on the cases. Right, our case 2 is about fraud and deceit. Right, it's about fraud and deceit. Now, this guy Howard, a security analyst at AZAC, right, a large brokerage house, submits reimbursement forms over a 2-year period to AZAC's self-funded health insurance program for more than 2 dozen bills. Right, I mean, quite a number of bills. Right, 2-year period. So 2 year is also quite long, most of which has been altered. There's some people still coming in. Right, most has been altered, right, to increase the amount due. Right, so obviously it is fraud and deceit. Right, he's trying to claim more than it actually is. So investigation, right, uncovers the misconduct, right. So ADZ subsequently terminates Hoffman's employment, right, and notifies CFA. Right, so this is a clear cut of fraud and deceit. Right, so well, we can clearly see that Howard, right, acted dishonestly, right. I mean, basically, is falsifying his claims over a prolonged period. But whether it is prolonged or not, he is still falsifying. All right, even one, even one receipt, right, is still falsification. So he has basically violated 1D because he has engaged in intentional misconduct. Right, so this is intentional misconduct. Right, so this is fraud and deceit, right, and basically this sort of behavior adversely reflected on his integrity. Right, so the key word is still integrity. Right, case 3, Jody, an analyst covering the automotive industry, volunteers much of her spare time to local charities. The board of one of the charities decides to buy 5 new vans to deliver hot lunches to low-income elderly people. Jody offers a time to handle purchasing agreements, to pay a long-standing debt to a friend who operates an automobile dealership, and to compensate herself for trouble. She agrees to a price 20% higher, right, than the normal, and splits, right, the markup, right. Basically, she splits the markup. So there is a markup here, right, with a friend. The director of the charity ultimately discovers the scheme and tells Jody that her services, whether it is free or otherwise, no longer required, right? So again, this is fraud and deceit, right? Dishonesty, right? And also misrepresentation. So basically, it is very clear that she has violated standard 1D. Right, by marking up the price. And so basically, right, she's milking the charity, for her own greed, right? So basically, she's being dishonest, she's committing fraud, and she's committing misrepresentation in this case. Is that clear? Any question? Right. Case 4. Now, this case is about personal actions, right, and integrity. Okay. Now, Carmen manages a mutual fund dedicated to socially responsible investing. Okay. She is also an environmental activist, right? So her personal actions, right, as an environmental activist. So as a result of her participation at non-violent protests, okay. So actually, the protests are non-violent. You got to take note, right? Carmen has been arrested for numerous occasions for trespassing, right? Trespassing basically it's going into somebody's property unauthorized, right? On the property of a large petrochemical plant that is accused of damaging the environment, right? So now in this case, right, this uh, right? So participation in non-violent protests, right? This is Carmen's personal actions, right? So now the uh, the key question here is, whether her integrity, right, as a professional, as an investment professional, right, is affected by all these personal actions, right? These participations in non-violent protests, right? So do you think these personal actions of us, like this, participation in non-violent protests, does it affect her integrity? Well, I would think not, right? Right. This doesn't affect her integrity as an investment professional. Okay. So basically, you can see in your notes, right? Yeah, I mean, she's been arrested for trespassing, but it is only trespassing. I mean, it is not actually a crime. Okay. Being arrested, it could be, just being apprehended, right? That doesn't mean that you're charged with a crime, arrested. So a lot of people think that, oh, if you're arrested, that means that you've committed a crime. Not necessary. You can be arrested on suspicion of committing a crime. So arrested doesn't mean that you are a criminal. Okay. So basically, this is mere disobedience, right? You're not supposed to trespass. So basically, she just ignore this rule of not trespassing. So basically, it's just mere disobedience, right? And basically, she's doing it, right, to support her personal beliefs because she's an environmental activist. Okay, right. So basically, this standard, right, 1D is not meant to cover legal tran- trans transgressions, right? So legal transgressions, we are talking about trespassing. Transgressions are, you know, you're trying to go into somebody's property. You're infringing into somebody's rights or property, right? So this is transgressions. Right. So basically, her act is an act of civil disobedience, right, in support of her personal beliefs. All right. So basically, what we are trying to say here is that her conduct, right, does not reflect poorly on Carmen's professional reputation because, I mean, it doesn't affect her job. It doesn't affect her reputation. It doesn't affect her competence, right? It doesn't affect all this, right? So that means she has not violated standard 1D. Okay. Any question? Right. So Right, if there's no question, I will start with lecture 4. Right, so lecture 4, standard 2, right? So I've basically finished with this, with standard 1, right? So standard 1, remember. So standard 1, we talk about knowledge of law, right? You must comply, all right? And I've talked about standard 2, right? So knowledge of law, I've talked about independence and objectivity, okay? I've talked about misrepresentation, 1C. You must not misrepresent anything about yourself, right? And lastly, I've talked about 1D, right? Misconduct. No fraud or deceit or dishonesty. So basically, we are talking about maintaining the professional reputation and integrity or competence. All right. So now I will talk about integrity of capital markets, right? A and B, right? Material, non-public information, and market manipulation. Right. So I'll cover 2A and 2B, and we'll talk about some relevant cases, right? Right. So material, non-public information. Right. Right. So there's two key points about this issue here, right? So actually, material, right? Material. That means the information is material, meaning that it is important enough, right? Right, important enough or substantial and significant enough to affect investment decisions. So this is what is meant by material. Okay, this definition. And then non-public, right? Non-public, right? Non-public, that means it is still private and confidential, not yet released, right, into the public domain, right? But is expected to be released sooner or later. Okay, so basically, if you infringe on 2A, basically you're committing insider trading because you're using inside information, right? So basically, this is a private information, not yet released, right? This is insider information, right? And if you use information which is inside and which are also material, right? And as this has not been released yet, right? So basically, you're committing insider trading. Right. So what are the consequences of trading on material non-public information? So basically, you know, uh, this this insider here will have short-term profits, right? Because you know this insider have special access to this privileged information, right? However, this idea is taking unfair advantage of the general investing public. Okay. So in the long run, right, the individuals or the investors, and the profession as a whole will suffer because investors will lose confidence in the capital markets. Okay. And right? So basically, the investors will avoid rigged capital markets. Rigged. That means, you know, there's some underhand, some people exploiting it, and it's basically fixed, rigged, right, in favor of the knowledgeable insider. In that sense, right, rigged in favor of the knowledgeable insider. Right. So basically, this standard 2A, right, because of all these, right, okay, because of all these four issues, right, this standard aims to promote and maintain a high level of confidence in market integrity. Okay. So again, the big word here, integrity. So what constitute material information? I'll go again, right? So, right. So this slide here is very common in the exam, right? So you better take note. What constitute material information, right? The first point, if its disclosure have impact on security price, it affects the pricing. Okay, the disclosure have impact on the security price, right? And the second point, if it's relevant for investment decision making. Okay. Third point, if it would significantly alter, right, the total mix of current information for investment decision making, right? Meaning to say that this new material information, right, if it's added to what you already know, right, it could affect your investment decision making. For instance, right, if you have decided to buy, right, and this new information, if it comes in, right, it doesn't mean that you will continue buying, right? It can also mean that you will buy more. It can also mean that you'll buy less or you won't buy. So that means it will alter, you know, your decision. Okay. Right. So hence, material information generally means what? Any information that is important, that is considered important, all right? Or information whose disclosure will have a substantial impact, right? Substantial effect on the price of a company security. Okay. Right. So if we talk about materiality, right? Okay. So these are the key factors, right? It's basically about the substance and specificity, right? Substance, what the information is about. You know, what is the information? That's a substance, right? And specificity regarding what issues. Okay, substance and specificity, right? And the extent of its difference from currently available public information, right? So these are the key factors, and its nature and reliability. Now, reliability is also important, right? Because the information could be substantial, could be specific, and could be very different from public information, but whether it is reliable. So where do you get the information from? So in other words, right, you must have all these three factors, you know, to determine materiality, right? So the last part is whether it is reliable. So in some of the cases that you're going to analyze, right, you have to determine, yeah, I mean, the information could have all this, but whether it is reliable. That's the last part. Okay. Now, if it's not reliable, that means it's not material. Yeah, it is supposed to be material, but because it is not reliable, then I mean, that doesn't constitute material information. All right. So examples of material information, like earnings, right? Or losses, right? If the company earns money, the price will go up. If the company loses a lot of money, the price will go down, right? So earning or losses are material information. Okay. Right? Mergers, you know what are mergers, right? Acquisitions, buy another company, tender offers, or joint ventures, right? So these sort of events would alter the financial fortunes of the companies. Okay. And maybe changes in assets, right? If they have big acquisitions or disposal. Okay. So if they, I mean, acquisitions could mean that the company is expanding, or disposal could mean the company is, shrinking. Okay. And whether the company has innovative products, processes, or discoveries. So if they have, this would boost up the share price, right? Other examples, you may have new license, patents, all right, registered trademarks, or regulatory approval or rejection, right? So whether it's approved or rejected, this could affect your profits, your sales, right? Developments regarding customers, right? Whether they lose customers or gain customers, right? Or whether they lose a supplier. Well, this is also very important. Suppliers, right? So, or whether they lost or acquire a loss or significant contract. You know, either with customers or suppliers. That is important. Or changes in top management, especially the CEO, CFO, right? Or the COO, the Chief Operating Officer, right? Or changes due to auditor notification, or the fact that the issuer may no longer rely on an auditor's report. Okay, that means even the auditor could have issued an inaccurate report, right? Or the issuance of a qualified opinion, right? So a lot of students, I mean, especially those who don't study accounting, right? So when they see qualified opinion, so there's nothing wrong, right? Qualified opinion, or the issuance of a qualified opinion. So actually, when you see the word qualified, right, it sounds positive, right? Actually, this word, right, in audit has a negative connotation, meaning that what the auditor is trying to say is that if the auditor's report is qualified, right, is say qualified, it means that what the auditor is trying to say is that there are some issues which the auditor couldn't verify, or couldn't prove to be true, and that's why they qualified. Okay, that means it's actually a negative report. Okay, so if the auditor issues a qualified opinion about the company, that means the audited accounts or the audited report couldn't be trusted 100%. So actually, that means this is actually quite negative, right? So, all right, okay, I hope you understand what is meant by qualified opinion here. All right, so these are just some examples of material information. Right, so other examples, significant abnormal events regarding the issuer securities. right? So abnormal events, you know, I mean, it could be like defaults, right? Default on senior securities, right? Or you have calls of securities for redemption, right? Or you may have repurchase plans, right? Repurchase plans, stock splits, or you may have changes in dividend policy, changes to the rights of security holders, right? Things like that, right? Or public or private sales of additional securities or changes in credit ratings, right? So all these are deemed to be abnormal events. Okay, so this could be quite material. Bankruptcies, right? This goes without question, right? Corporate bankruptcies, or even maybe bankruptcies of the top management, personal bankruptcies of the management, okay? Or significant legal disputes, right? So if you're drawn into a dispute, probably you know, this will create some kind of scandals, right? Scandals will affect the reputation of the company, and this could be negative, okay? And you know, government reports of economic trends, right? This could affect the nature of the business, the you know, the company is in, right? So you know, I mean, reports of say employment, housing starts, right? Currency information, all these are also material information, right? And lastly, right, orders for abnormally large trades before they're executed, right? So these are quite suspicious too. Okay, right. So having discussed what is material, now we talk about what is non-public. So any information before dissemination is non-public. So information is non-public until it has been disseminated or is available to the marketplace in general, right? As opposed to only to a select group of investors. Okay. So dissemination could also mean made known to, right? Dissemination, disseminated. Once information is made known to the market, right, it is public information that is no longer covered by Standard 2A. So basically, material non-public is information before dissemination. So what about selectively disclosed information? Selectively disclosed. That means not all. Right? So if it has been selectively disclosed, some parts are disclosed, right? So this information, if it's selectively disclosed, it still remains non-public. It is still considered non-public. Okay, until and unless it is made available to all investors. Okay, so that means selectively disclosed information is still considered non-public. Okay. All right. Any question? Right. So that means companies shouldn't selectively disclose information. Okay. So that's why corporations, right, that disclose information on a selective or limited basis, right, basically these sort of practices, right, create the unnecessary potential, right, for insider trading violations. Okay, this is a very serious offense. Okay. Right. So when we talk about non-public material information, right, we have this concept called the mosaic theory. Okay, the mosaic theory. So before I talk about the mosaic theory, I just talk about what is a mosaic, right? Mosaic. Okay, so basically mosaic is just a surface decoration made by inlaying small pieces of material to form pictures, right? So or mosaic could be just a picture or pattern produced by, bits of small stones or what material, right? So basically a mosaic, right, is basically a big picture. The idea. The idea of a mosaic is basically a big picture of small items joined together, right? That's a mosaic. Right. So basically, the mosaic theory, right, involves collecting bits, tiny, small bits, right, small bits, right, of public, non-public, and non-material information about the company to determine the underlying value of its securities, right, and to enable the analyst to make recommendations to clients based on that information, right. So that is basically the gist of mosaic theory. Okay. Now, right. So this is an example of a mosaic, right? A mosaic. You can see actually there's small bits of tiles or whatever, stones joined together to form a big picture. So after you join all these bits of uh, tiles, right? So these tiles represent bits of information. Right. So these are all bits of information, material and non-public and non-material public information. All right, public information. So this mosaic does not include any material non-public information. You get it? Okay. So here, right, when all the relevant parts are pieced together, investors will be able to see the complete and true picture before making rational investment decisions. Okay. So this mosaic basically is like a metaphor. Right. So, okay. Now, mosaic theory, right, covers both public and private information, right? And for public, right, it could be material and non-material. Okay. And if it's private, it covers only non-material. So you can see, right, there's no private material information, okay, or non-public material information in mosaic theory here, right? It's not here, right? Okay, so if you rely on only all this information, only if you rely on only all this information, right, you are not practicing insider trading, right? You have not violated standard 2A. So basically, mosaic theory, is like a defense. If you're accused of insider trading, and if you can prove that you have only used all this, then that means you have not committed insider trading. As you can see, this diagram does not have private material information here. Okay, so here is only non-material private information. Okay. Right. Right. So basically, mosaic theory, right? So this theory refers to a method of analysis used by security analysts to gather information about a corporation, right? So if you refer back to the previous slide, right, it talks about all public, non-public, right? All public, non-public, right? Non-public and non-material information about the company. Okay, to determine the underlying value of its securities and to enable the analyst to make that recommendation. Right, again, you go back to this slide. Okay, so you must be clear. Public, material, public, non-material, private, non-material. So does it include private material? Okay. So you have this defense, right? Mosaic theory defense. So basically, this standard is not violated when an analyst reaches conclusions about a corporate action or event through a mosaic analysis of public information, right? And items of non-material, non-public information. So this public information here are both non-material and material, right? And this non-public information must be only non-material. Okay. Again, if you are still confused, right, going back to this diagram. Okay. So, right, so in other words, the analyst did not reach his or the conclusions through the use of material non-public information, right? Material non-public information. Did not reach his conclusions through the use of material non-public information. Right, so there's this case, right, in 2011, right, this hedge fund manager, Rajaratnam, right, in America, actually, he used this mosaic theory as his defense during his insider trading trial in 2011, but was ultimately found guilty. Right, he tried to use it, but he actually used inside information, material, non-public information. So the prosecutors, accused him, of that he made 63.8 million, for these 6 years, right, through insider trading in stocks, in this sort of stocks, right, eBay, Goldman Sachs, and Google, right, and so he was actually convicted on 9 counts of security fraud and 5 counts of conspiracy. So he was sentenced to 8 years, right, and well, this year in July he'll be released, right? But actually, he was ultimately found guilty, and he tried to use the mosaic theory as his defense, but it doesn't hold water. Right. So now in it, this part is very important, as I said, right, for your suggestions, for guidelines as to how to improve on or to avoid violations of this standard. Okay. So these are just some recommended procedures. Okay, so first guideline, if the non-public information is material, it should be disseminated through public dissemination, right? Don't hold it. Right, so basically this effort, usually entails encouraging the issuer company to make the information public. And if the public information is not possible, right, the information can only be communicated to designated supervisory and compliance personnel in the firm, right? These people, right, they know about these standards, right? They know about the danger of insider trading, so they will keep their mouth shut. Okay, they will not take investment action based on the information, right? Investment action must not be taken on the basis of the information, as I've said. Right, or encourage adoption of compliance procedures, Okay, so basically, what sort of compliance procedures we're talking about? Basically, we need to review each employee's trading, right? Or proprietary trading. So this proprietary trading is trading by the firm. Okay, you may have employee trading. So employee and proprietary trading. Okay, so what we're saying here is that proprietary trading means trading on behalf of the firm. Here, employee, that means the employee's personal account. Okay, and documentation of firm procedures and supervision of interdepartmental communications. So these interdepartmental communications, right? So a lot of information flows, between these departments. So some information could be material. So if it's still within the department, that means it's still considered non-public. Okay, so that's why this has to be tightly controlled, right? All these information flows, right? And circulate written compliance policies and guidelines regarding these information flows, right? And there must be sufficient training to recognize, right, what all these material non-public information are, right? And to be able to make an informed decision. So sufficient training must be given to all employees. Right, so regarding disclosure policies, right? Okay, these policies, right? So the key point is that the information must be distributed in an equitable manner, in a fair manner. Okay, hang on for a sec. Right, in a fair manner to everybody at once, so equitable manner. Right, example, right? Analysts from small firms should receive the same information and attention from a company as analysts from large firms. So big or small, the information should be distributed to them in an equitable manner, right? So a company should not provide certain information to buy side and certain information to sell side, or not to sell side or vice versa. So there shouldn't be any discrimination. Okay. Okay, should not discriminate among analysts, right? So, or discriminate against analysts who have given negative report, things like that. Right? Any question? Right. Right. And then here, this point, right? Consider issuing press releases. Right? That means press conference, right? Prior to analyst meeting and conference call, and scripting those meetings and calls to decrease the chance that further information will be disclosed. Right. So here, I mean, if you issue press release, right, that means it's to the general public, right? Okay. So the information is released, right? Should be released prior to analyst meeting. You cannot do the other way around, right? You cannot hold a meeting and conference call and then have a press release. Then you'll be violating 2A. Okay. And if you do have meetings and conference calls, right, you must be scripting those calls carefully. Scripting, that means you must decide what is to be discussed. Scripted. Okay, that means you have to plan in advance what are the information that will be discussed at these meetings and conference calls. right? So now, and this is another guideline, right? If right, all this material non-public information is disclosed for the first time in an analyst meeting or call, if right, then the company should promptly issue a press release, right? Or otherwise make the information publicly available. That means it's almost simultaneous, then it's okay. Then it's considered equitable, fair. Right. So now this concept of firewall, right? So firewall within the firm, right? The company can institute a firewall, right? So basically this term firewall, just like in your computer, right? You have a firewall, right? So basically this prevents or restricts communication of confidential material non-public information within the firm. So the idea of this firewall is to prevent or restrict. Okay. Now examples, there must be vetting, right? Relevant interdepartmental communications must be vetted, right? Vetted. That means somebody must determine whether the information can be communication, right? So, I mean, yeah, this clearance area, right? Like the compliance or legal department. Okay, this department will vet the information, right? Vet the information, right? Or you can review of employee training, right? Employee training themselves, right? Through the maintenance of watch, restricted or ROM list. Okay, you have a watch list, right? So watch, what is watch, right? Restricted. Now ROM list, right? ROM list, that means ROM actually means beyond or deviating from the usual or expected, right? ROM, beyond or deviating from the usual or expected, right? Restricted list, I mean, like this sort of list would mean that you're not supposed to trade uh, on these companies. Okay. All right. So this is a way to control personal trading. Right. Again, this is the same thing, right? Documentations of procedures. So, designed to limit the flow of information between departments and of the enforcement actions taken pursuant to those procedures. Right. Nevertheless, the idea is to limit the flow of information. Okay. Or you can have heightened review or restriction of, right, proprietary trading, right? So this is trading by the firm, right, while the firm is in possession of material non-public information, right? So these are just examples, right, of firewalls, right? So this is just a diagram, right, to show physical segregation, right, of different departments in a brokerage firm, right? So probably you have an investment banking department, right? Investment banking department, you have a corporate finance department that raise funds, right? And you have a sales and research department. So information could flow between these departments. So you have a compliance or legal department in the middle. Basically this compliance department will review and approve the information flows, right, between these departments. Okay, so basically, this is like a firewall, right? So a good firewall procedure basically contains a reporting system in which the authorized personnel review, right? So basically they review and approve all these interdepartmental communications. Okay. Right. So, and this point here, right? If an employee behind the firewall believes it is necessary to share information, okay, a designated compliance officer should be consulted. Right. So this employee behind the firewall, meaning the employee could be here, or could be here. Right. So this is the firewall. So any employee in this department wants to share information with employees of another department. So this is what is meant by employee behind the firewall. All right. Right. So basically, here I just want to emphasize the difference between proprietary trading and personal trading. Right. Proprietary trading, right? The firm actually trying to make money itself. Right. Personal trading, that means the employee trying to trade and make money for himself or herself. Okay. So, but here for personal trading, right, the employee must make periodic reports of personal transactions. Okay. Right. So to control or restrict proprietary trading or personal trading, right, whether it is proprietary or personal, right, while a firm or individual is in possession of material non-public information, right, so the firm or individual may be placed in the following list, right? So that's now I'm going back to the three lists again, right? Restricted, watch, and RUM. So restricted list basically it means when they are deemed to be in possession of material non-public information. That means you are not allowed to trade, right? If either the firm or the employee. Watch list, that means your transactions will be monitored in specific securities in which they may have material non-public information. So you're placed on the watch list. RUM list if their transactions are beyond or deviating from the usual or expected, right? As I've said in the previous slide. Okay, so this is what is meant by restricted list, watch list, and RUM list. Right, so with this, I end my lecture because it's time. Right, I will continue with the case studies on Standard 2A material non-public information on Wednesday. Right, so I'll see you on Wednesday. Bye for now.